I think we can start our workshop now. Uh, so as always, I just want to introduce myself and our organization. So many of you may already know me. My name is Vartu Yanjasyan, and I'm a business counseling manager at Pace Business Development Center. So PACE is a nonprofit community development organization, and we have many different departments. Our programs include early childhood education, workforce development, energy efficiency, and business development from where I am coming. In the Business Development Center, we support entrepreneurs in Southern California by offering business counseling, procurement assistance, and access to capital. I would also like to add that under the City of Los Angeles, there are 10 BusinessSource Centers through the city, and PACE hosts two of them, Pico-Union and Hollywood Center, which I manage it. So PACE is also a SBA micro lender, EDA, and iBank lender, and we are also a certified CDFI. So today's workshop is we brought this workshop in collaboration with Makahakama Foundation. So we recently started our collaboration and cooperation with the foundation, and they have a program, LaunchPad program. I will let them to talk about the program. This workshop, in this workshop, you can learn simple tools to track the cash flow, improve your financial decision making, and which eventually can help your business operation. We have Joyce, Anu, and Mariette with us from the foundation. Mariette is a volunteer, and again, they will give you a bit more about the foundation. They will give more insight about the foundation, the program details. There is a grant with the program, so after hearing about the information and the details, and if you decide to go for the program, please make sure that you will indicate that you are referred by PACE. So, and as always, we have Q&A sessions. We will have it through the session, and we can have it also at the end. You can unmute yourself, you can ask your questions. So I would like to hand it over to Joyce. Joyce is the co-founder and the president of the foundation. So she will introduce herself, and then we will take it from there. Thank you again, everyone, for joining today. And I am pretty sure you will enjoy this workshop. Thank you.
Thank you, Vartuhi. We really, really want to show our gratitude for Vartuhi and PACE for the work they do and their partnership with us. We really, really appreciate it. Thank you. Very excited to be here today. Thank you all for coming and spending the time with us. I'm just going to give you just a little bit of an introduction to our organization and what we do and why we do it before we start the program today. So my name is Joyce Chung, and my colleagues here are Anu Sangvi and Mariette Martinez, who you'll be hearing from later today. And we work with our foundation, the Makahakama Foundation, where one of our key focus and mission is to help under-resourced entrepreneurs. We firmly believe that entrepreneurship is a really important path for individuals, for families, for communities to build prosperity and financial stability, create jobs, and strengthen communities. And so often, many entrepreneurs don't have access to resources in the way of capital or knowledge or mentors to help them to successfully grow their businesses. It's a really, first of all, kudos to all of you for being entrepreneurs, because it is a very tough path, because the failure rate is high. And you really need to be smart about how you spend your resources and build your skills. So what we want to do is help you succeed. And what we came up with is the program that we're going to talk to you today about. It's called the LaunchPad program. And what we wanted to focus on was how to build the financial skills to help you build the foundation for your business so you can make good business decisions and grow your business successfully. And so that's where we came up with this program. And it works in conjunction with many of the services that organizations like PACE and other technical assistance centers or CDFIs offer. But it's a very practical, hands-on program. So just in a nutshell, Anu's going to go through more of the details about the program and how to apply. But what we wanted to do today was tell you a little bit about the program, but also kind of get you started on the path towards understanding how to look at your business and talk about your business. So just my husband, who has spent his entire career selling software for small businesses, that's his passion. He talks about accounting being the language of business. And for you to understand this language and to be able to speak and talk about your business is really important for you to have really kind of get a handle around that. So often entrepreneurs are focused on the operations of the business, which is obviously very important, but also thinking about your business strategically as a business owner is also important. And that a lot of that entails really understanding your finances and your business metrics based on those finances. So that's what our goal is, to kind of get you started along that path to really understanding accounting, bookkeeping, how you keep your books, why you categorize your expenses and all your revenue in certain ways so that you can successfully build your business. So in the program, should you decide to apply to this, is 4 months of hands-on one-on-one mentorship with a professional bookkeeper. So this is really valuable. As many of you probably know, hiring a bookkeeper can be expensive. And so working with one that's going to work with you just on your business. And really the key is it's a mentorship. They're not going to actually be doing your books for you, but they're going to be showing you how to do it using the software tools that you select. So that's a really important piece of this. And you'll hopefully develop practical tools and best practices for building healthy financial habits. And if you successfully complete the program and hit the milestones, you will get a $500 grant for doing that on the recommendation of the bookkeeper that you're working with. So Anu will go through more of the details on that. But what we thought we would do today is go beyond, just talking about the program, but actually start what we call the program readiness process. So in order to be ready to start the program, there is a set of tasks that have to be accomplished. They're not hard tasks, but it's filling out a worksheet, and we're going to walk through that today with Mariette. But it's helping you sort of get everything in order, so you're really ready to start. Hit the ground running with a bookkeeper when you're matched. So we're going to talk about some of that today, and how you would actually fill out. There's a worksheet that we're going to go through. So, but before we do that, we thought it would be fun to introduce ourselves. We've got 80 attendees, 81. And if in the chat, if you could put the name of your name, your business name, and then what is the one word that comes to mind when you think about your business finances? And I see headache. That is a common response from Dee. And it'd be great to just hear and meet all of you and hear what your thoughts are. So as Mariette said earlier, if you have a question, feel free to jump in the Q&A, if you can do it there, because we have so many people, it's hard to track sometimes within the chat box. But if you do want to type in the chat, just write Q colon and then your question. But we recommend putting your questions in the Q&A box. Great.
Joyce,
So
can I
we've
jump
got
in and share some of these words?
absolutely,
Yeah,
absolutely.
yeah. So let me jump in. And
Horrible.
it's very common that the first words that come to mind are not always the most enthusiastic words when it comes to finance. It's usually from the business owner. If you ask me, those would have been like very positive energy infused words. But this is very normal. So overwhelming, complicated. Hopefully, we're going to simplify that for sure today with an exercise. Complicated again. Need help understanding my timelines? Yes. And so that's really good. I love that. Catching up. My first word is catching up. Oh, I love these because we're changing the language a little bit. It went from like kind of negative to now, well, if I knew how to catch up, if I knew how to be less confused, if I knew what my due dates were and I can get, organized in my finances, we kind of can shift the language. So it's interesting. I can even see the shifting of our energy happening right now in the chat. So keep them coming, guys. Even confusing. So confusing is not necessarily a negative word. It's a feeling, right? And finances are, I'm going to speak for myself right now. I think finances are very connected to our feelings. And that's why words like confusing or anxiety, I saw someone put anxiety, that comes up a lot because of the fact that we feel a certain way when it comes to finances. But imagine if you felt differently about finances. Then what kind of words would come through? I just want you to kind of think about that and maybe feel into that. Funding, I love that word. Now we're talking more logistics here. Like when we think about financing or finances, I need to fund my business. How do I do that? How do I get outside funding? How do I get grants? How do I get loans? How do I qualify for things? So I'm kind of elaborating a little bit. If you said funding, I want you guys to think about what else is coming through. Why funding? Why does funding come up for you when you think about finances? So just some things, putting on a thinking cap. Okay, yes, I love that, Zena. Yes, let's put on a thinking cap when it comes to our finances. Increasing. Ooh, yes, okay. Need our money? Okay, yes, we need money to grow money, right? It could be our own money or other people's money. Debt, yes, and there could be good debt and there could be bad debt. So that's something we could talk about. Profit expansion, growing. Ooh, okay, now I'm feeling the energy. So I'm going to pass it back to Joyce or Anu to kind of see where they want to go next. But I just wanted to get a little bit into the words being more than the words, right? They always say if you want to really understand why someone's saying something, ask them the same question 7 times. And then you can actually get to the root of why they feel a certain way. So let's do that a little bit today. Let's go into the root a little bit more. I'll be sharing an exercise that may seem, fundamental or simple, but we have been doing this exercise with all of our program members over the last, I think, 4 or 5 months now. And at first, they think it's a simple exercise. And then when we get deep, they're like, oh, wait a second. There's a whole lot more to do here. So, but before we get into that, Anu, Joyce, do you want to share anything about what you're seeing in regard to the words and the feelings that are coming through?
I think it's all over the map, and hopefully, our goal is to kind of bring some clarity to some of this. So I think we should jump right in, Mariette. You're muted right now.
Anu, did you
There
want to
you go.
jump in before we get started?
Thanks, Marriott. I just want to express gratitude to everyone for being here today, taking 2 hours out of a very busy day, I'm sure, to focus on this really important topic that is easy to sweep under the table and not deal with because it's anxious, anxiety provoking, because it's stressful. So we tend to delay these conversations and these moments. But the sooner you can get your head around it, the sooner you can get help and support, the sooner you can be on your way. So I just want to express gratitude for everyone being here today and for supporting this program.
Yes, awesome. Thank you. Yes, very, very grateful to Pace, to the whole team. And yes, we do have the Vartuhi. Did you want to, someone mentioned, is this 2 hours or 1 hour? Did you want to confirm that?
This will be like more than 1 hour. So we put 2 hours that we have ample time to have like address questions, and have the conversation. We want to have the interaction. So we put, more hours that we will not have that limitation. But, attendees, if we understand they are business owners, they may need to leave earlier. So they can feel free to leave. But again, the intention is to have this interaction with the attendees. They ask their questions, and for the same reason, we put a little extra time there. Okay.
Yes. Awesome. Thank you, Latifi.
Just add one thing from all the attendees. If, generally speaking, at the end of, when you exit the workshop, there is a survey. We really appreciate it if you take like a minute to complete that survey. It helps us to understand what we do good, what we don't do good, and what else we can bring for you, like what kind of topics, what kind of information you need that we should, work on it. So I really appreciate if you spend a little of time to complete that survey. Thank you.
Thank you, Vartuhi. Yes. Yeah, so, and I know Vartuhi, just to confirm, this will be recorded. So for those that do need to jump off at an hour, they can watch a replay, correct?
That's correct. We are recording this. This will be uploaded in our e-library. So I will share the link. So maybe it will not be immediately this week, but, hopefully by next week, it will be uploaded there.
Perfect. Okay, awesome. All right. So yeah, we're going to get started. We're going to go into what we call our money in and money out, a worksheet and exercise. Before we get into the exercise, let me just, well, first, yes, grab the memo sheet. We call it the memo. We like acronyms to keep things simple. So if you want to grab the worksheet, feel free to do so. Just so you know, I'm going to kind of go through the concept of it. By all means, I am going to get quiet for maybe a minute or so you can have some interaction. You don't know me yet, but if you follow me online, Marriott Martinez Master Books, I'm about messy action, right? That's how we're going to actually learn and implement in real time. So we want you to get your hands dirty. So hopefully you're somewhere where you can type. If you're not, no problem. And if you prefer not to have a spreadsheet open because in your learning style, you prefer to just see one thing at once, then I always say, have a notebook, have a notebook nearby, and you can do all this just on a notebook. So y'all just do whatever feels most comfortable for you. You'll always have access to this worksheet, though. I'm sure Votuhi will also give it to you in your notes or any kind of replay materials. And then we'll keep on sharing it in today's session as well. Okay. So before we get into the memo, though, I want you, and we can go to the next slide, just to kind of set us up for today. So in the LaunchPad program, as Joyce had mentioned, we want to set our program members, who we refer to as our mentees, because it's a mentorship program, and our mentees have mentors that really are setting them up for success. So I'm going to use several of the words that I saw, the confusion. I want a simple process. I just need to know the steps. I need to know the due dates. Can you give me a structure? I need to know what I'm supposed to do. Give me some true, clear choices on what to do next. That's what this program is about. And we use milestones to do that. So we give you a list of milestones, and both the mentor and the mentee has these milestones. And it's really let's just keep it super simple. 3 goals. The first one is understanding fundamentals, understanding financial and accounting literacy, which many times gets skipped when you are boots on the ground trying to bring money into the household, into the family, into the business, and you skip that deep accounting and financial literacy. So that's goal number 1. Goal number 2 is, now that you understand that there's literacy to learn and to become aware of, well, how do you actually apply that in general? So there's money management best practices. There are, understanding your financial statements best practices, your balance sheet and your profit and loss. And yes, you need both. And there's the opportunity to do your own books if you feel confident enough to do that after you've gotten this literacy, or to ask for help. So that's really kind of the second goal. Once you understand this information, what are you going to choose to do? Are you going to do it with someone, or are you going to do it on your own? Or maybe a hybrid of that. And then lastly, the idea is this concept of, even if you're going to do it on your own, there are mentors out there. And that's what the whole LaunchPad experience is to know that there are people out there that want to hold your hand and either set you up right from the beginning or have you play catch up. Someone said catch up in there, and catch up means no judgment if you skip this learning, if you skip this step in business. This is your opportunity to catch up on that gap, to bridge the gap between being a business owner and being a financially engaged and empowered business owner. We want you to bridge the gap And we're giving you a program to do that. And so this, what I'm going to teach you right now is just one of the several concepts that we empower our business owners with. And then we ask our mentors to continue this conversation with them once they join the program. So I just kind of want to set the stage on this particular topic. So of course, since this webinar is about cash flow and money management, that's why we felt this was the best exercise for you. So very general, what is money management? Money management is managing the money in and money out. Now that seems very simple and very fundamental, but it's not. And here's why. Because depending on your business model, and now I want you to really think about yourself for a minute. This is an opportunity to be self-love. It's not selfish to think about your business, okay? So think about your business. What is the money that comes into your business? It's very different than what comes into your neighbor's business. So really think about what's happening in your business. How does money flow in? And all money in is not always income, and we'll cover that in a minute. But that's something I want to just state out loud. True transparency. We need to shift. Oh, yeah, I already know what money in, Mariette, is. It's revenue. I already know what money out, Mariette, is. Expenses. Incorrect. That's incorrect. Because money in could be revenue and something else, and money out can be expenses and something else. So we want you to start thinking about that. So again, money management is really learning what money in and money out is related to your business. How does it occur in your business? Okay, next slide. So once you start thinking about kind of transactions, then I already saw it there. People say, well, the other thing that, I struggle with or stresses me out is the taxes. Well, you don't have to struggle with having your books be tax ready or finance ready or loan ready if you're doing your bookkeeping year round. If you're looking at these finances year round, then you are in essence already categorizing transactions and information for bookkeeping and tax purposes. And that's why I tell businesses that tax ready is not a tax time ready, it's a year round ready. We should be tax ready every single day of the year, because as you're doing this work, your bookkeeping, your accounting, your taxes, everything is ready at a moment's notice. And so that's something that we want you to understand as well. And that's why you want to take the time to really understand how money flows in and out, and then how you categorize that. So how do you call it? Because based on how you call it, it's going to post to what's called your general ledger. What's on your general ledger? It's going to post to your financial statements, like your balance sheet and your profit and loss. So again, full picture there. So that's also part of money management. Okay, next slide. So understanding that, what we're going to do is we're going to just, again, pull out two concepts and let's have a conversation here, okay? Let's have a conversation about money in coming into your business and money out. And we're going to do each one separately. So let's cover money in. So when we talk about money in, again, it's very, very common and natural to say, I know my money in. My money in is the gross income that comes in, and I can even tell you how it comes in. It comes in as, I have pop-ups, I do events, or I have a business that I accept cash, so money comes in as cash. I also possibly still get checks. Maybe my larger customers and clients write me a check. I invoice them and they send me a check. If not, maybe they send me some kind of equivalence of that. Maybe they pay me through ACH or through an electronic transfer. If not, maybe they pay me through credit cards. Now we're starting to feel, even me, okay, now there's more ways of getting paid. As soon as you start increasing ways for money to come in, this is very important, everyone. As soon as you start increasing multiple measures or multiple methods of money coming in, that is going to increase a little bit of your anxiety level, right? Because now you got to capture more information. So let's say you said, well, Mariette, you're right. I have cash coming in as money in as gross income, which is revenue. I get checks. Okay. I also get paid through credit cards because I use a credit card merchant service. And I actually accept 3 or 4 different credit cards. So I have a few merchant services. Okay. And then guess what? I jumped onto the train with the peer-to-peer payment services. Those are your PayPals, your Zelles, I don't know if Cash App is there anymore, but there was a Cash App, Square, Stripe. I can go on, right? And so those are all the different payment methods that your gross income comes in. So that's number one. You need to think about that. You need to hopefully write that down somewhere, or if not, you need to financially organize these datas coming in, these documents, these summaries, these account statements, because when you sit with an accounting professional, the first thing they're going to say in their accounting language, which is probably not your language, is, so where are all your statements? You're like, what statements? Well, you just told me you got paid with credit card, check, bank, transfer, PayPal, Stripe. I need to look all of your summaries. Where are all these accounts? We need to log in. And then that's where the disconnect happens between the bookkeeper and the business, because it's like, oh, wait, what are you talking about here? And so we need, as business owners, I'm speaking from a business owner's perspective right now, we want to get ourselves organized so we're ready for that conversation with that accounting professional. Because again, depending on how that money's coming in, you're the only one that knows that. In other words, I don't, neither does the accounting or the tax professional. Okay. I keep that in mind, top of mind for a moment, because we're going to do some work around that. Okay. Next slide. So also what's really important around the concept of money in, and this is for my business owners, hopefully my accounting professionals know this already, but I'm going to say there are times that even accounting professionals are like, oh yeah, good point. All your money in is not gross revenue, is not gross income. They're not sales. Now, would I loved for 99.9% of all my money coming in being revenue? Yes, of course. But there's other times I have to bring business money into my business to grow my business, to capitalize my business, to inject cash, because I don't want to run out of cash, which is the number one reason why businesses fail in the first 5 years. So then how does my business survive when I'm first starting out? Or let's say, for example, I have a cyclical business. It's seasonal, it's cyclical, meaning that there's times when it's high and there's times that's low. Construction, my construction clients, they have the winter number, meaning in the winter, they go way down. So if you have a business like that, if you have a business model or industry like that, seasonality, absolutely, Edward, yes, seasonality. So if you have a business that has seasonality or cyclical, or whatever you want to call it, but essentially I always say there's a downtime. Okay, let's just know there's a downtime. How else does money come into your business? So many times it's us at first, right? Like this is our baby. The business is our baby. So the first thing we're going to do is we want to put our own money in. Is that always a good idea? I'm not going to judge what people do, but like, are there other opportunities other than us pulling out of our savings? Think about that. But that is very common. We pull right out of our own personal funds. Do we qualify for a loan? Do we qualify for a grant? Do we ask a family member or someone else, a partner, to invest in our business? These are all other money in transactions, lines of credit, cash advances. So those are common ones, but now let's kind of think about it a little bit differently. What if we have a nuance where we did sell something and the person actually doesn't want it? So then we get a refund. Or let's say we bought something and we didn't want it, and then we get a refund. So think about how else money comes in. And those are, again, a little bit exceptions to the rule. But think about that when it comes to how transactions are coming in. And also, just to keep this very simple, when you want to look for examples of what I'm saying, I'm giving you a whole lot of examples on purpose, because this is what I see as an accounting professional. All you need to do is pull up maybe your last 3 months worth of bank statements and sit down. We just did this, and Joyce and I did, we just did this with a mentee of ours, and we're like, just pull out your statements, get a highlighter, and all the stuff that's not income, highlight it in yellow and come back to us and ask us what came up for you. And then we'll explain to you how to either call it or how to post it or what it is. And you'll also become more aware of it, because most people don't pull up their bank statements and highlight stuff that's not income. They just assume everything's income. And we clearly know that's not the case. Okay. So this is just really a slide to give you some examples of what came in your bank account possibly that is not gross income. Okay. So I'm going to pause for a moment. And we're going to take some questions as well. But before we do, let's go ahead and do the next slide. And we're going to start our first exercise. So again, I told you we want to get our hands dirty, okay? We want to get our brains working. We want to get excited here. So we're going to take should we do 1 or 2 minutes? What do we want to give them?
Let's do 2 minutes. And there are some questions in chat as well as in Q&A, so I can point you to those, Marriott, when you're ready.
Yes, please. Yes, point those to me when you're ready. And I'm going to put on my timer, because I like to be mindful of our time. And if we say 2 minutes, we're only going to do 2 minutes. So here we go. So what I'm going to ask all of you to do just for 2 minutes is I want you to think about the 2 categories I talked about. So again, if you have your spreadsheet open it up, and you're going to see that on the spreadsheet, the first tab says blank. that's for you. The second tab, don't look at it yet unless you've already went ahead and, and looked at it. That's basically where we give you more examples, but I've already given you some good examples. So feel free to just stick on the first tab on the top of the actual spreadsheet where it says income. And I want you to think about three things. Okay. I want you to think about what type of money in it is. So I gave you some examples of that, right? I want you to think about who it came from. So I'm going to just give you a couple of more real examples because again, we do this with our mentees all the time. So we had a mentee that does a lot of pop-ups and she said, well, I have like pop-up income that comes in and on those pop-up, at kind of at the trade shows or at the swap meets or at the farmer's market, I just use a stripe. Like they just swipe my card and that's how I get the money coming in. So basically those are really pop-up customers. So that's pop-up customer income coming in, and she's using a merchant service like Stripe or some other type of swiper that she can use. The money's coming in through there. So now she has to think about eventually she's going to have to pull up that summary of all the money that came in from that farmer's market pop-up event. And how is she going to be able to, number one, prove that money came in, that it's income, because we want to make sure for tax purposes that we are documenting everything and the source of the actual transaction, the true transaction is called source of truth. So she would eventually be able to pull up, let's say, her Stripe account and pull up those summaries, maybe her PayPal account. Zelle, if she was using Zelle, she'd have to go to her bank account and pull up the Zelle activities. So that's what I want you to think about in regards to what would be income. Then, and that's why I put think of income streams, because maybe the same mentee said, well, I also do big contracts. They're like, great job. She's like, these are big contracts. They hire me as a 1099 contractor and I just invoice for those because those are in the thousands of dollars. So I invoice for them. And then this particular client sends me a check. And so I have to wait for the check to come in. And so that case, that's really just customers, invoices to customers is the type of transaction coming in. She could put the name of the customer if she wants in the notes if she'd like. But the idea here is just to think about how the transactions flow through. And in that case, her proof is that she's sending an invoice to the customer and then they're paying them through the bank account. So she actually has proof through her bank account that the transaction came through. I saw someone mention, well, doesn't QuickBooks do this? QuickBooks does some of this, but it doesn't save any of the proof of the transaction. You're the only one that does that, unless you're actually also using, let's say, QuickBooks receipts or you're attaching statements or things like that. So we can cover that in a moment. And the last thing I want you to think about is the non-income. So how do transactions come in that are not related to your business? So are you contributing to the business? Have you gotten grants? Have you gotten other type of capital injections, lines of credit? So it's SBA loans, right? So think about that, everyone. I'm going to give you a minute. I'm going to get totally quiet. Which is difficult for me. So I'm going to get quiet and let you just think about that, write that down. And then if you're brave enough and if you finish within 2 minutes, go ahead and start sharing in the chat. And we are going to open it up for a minute in the chat as well, in addition to answering any questions that have come up to this point. So I am going to start the 2 minutes right now.
I'm just going to point out that this worksheet is one of the tasks that has to be completed in order to get matched within the LaunchPad program. So if you seriously are thinking about applying, now is a good time to just get this done and check that box.
Mariette, I see a comment that it says the presentation is a little fast.
Okay, I will slow down.
Okay.
So I love the questions. I love this is a brave space. So if you're not sure where it goes, just write it down. And that's our discussion topic. That's exactly what we're going to talk about. Write down whatever's coming up for you. We'll let you know, if you put it in income or if you put it in not income right now, what we want your juices to be flowing on is what comes through your business and from a money in perspective. We're going to give you another 20 seconds and then we'll go back. Okay, everyone. So I know 2 minutes goes really fast, by the way. I was telling Anu and Joy, when I do this, I give my members like 10 minutes. And so, but since I want to bring Anu and Joyce in, and I want this to be super interactive, and I don't want so much downtime, especially for a virtual session, let's just start chatting. So I'm going to first, Anu, I know you said there were some things that you wanted me to look at or answer in the questions. You want to do that first?
Yeah, I think you lightly touched on it, Marriott, about just, doesn't QuickBooks, I think this came from Kamran?
Yes,
Kamran.
I did see that one.
Yeah,
Yes.
so, QuickBooks does all the categorization automatically, so I don't understand why I have to do this.
Yeah, it's such a valid kind of first question or kind of almost a perspective many business owners have. So QuickBooks is just a tool. So, what QuickBooks does, especially now with AI, and I have been, I've been working with QuickBooks since 2008. Was a QuickBooks instructor, so I was on their trainer team, actually teaching my own peers on their certifications. I trained all over and actually spoke at their national conferences for the last 11 years. So I'm an advocate for software, but software doesn't know your literacy and software doesn't know your business. So the point is here, before you start putting things in QuickBooks, can you sit and look at your chart of accounts, for example, and say, this is exactly aligned with my business model. This is aligned with how the money comes in and the money flows out of my business. If you can see that on your chart of accounts, if you can look at your balance sheet and your profit and loss and your cash flow statement and say, it's giving me every decision I need to know what to do in my business, then your QuickBooks is set up right. But QuickBooks is just a technology. It's just a tool. So we need to be very clear about that when we're separating the literacy with the tool. And absolutely, I always say leverage technology to do things smarter and faster, but not if you skip the fundamentals in the literacy stage. So we need both to bridge that gap. Hopefully that answers your question. Okay, anything else, Anu?
I think Kamran had one more question about, just what revenue range we support. And Kamran, I'm going to get to that at the end. So if you can hold that thought, we will cover that towards the end of the program.
Perfect. So I'm going to do some shout outs to some of you that have got really into this. So thank you for doing that. So, and I won't say your names. I don't need to shout out your name. I want to respect your privacy. But we have one that says income is like being a prime contractor. Yes. So if you're a contractor, if you're either the general contractor, the prime contractor, an independent contractor, you're receiving monies that you will definitely, hopefully by now or the next week, you should be receiving a 1099 to prove that you received that money from your customer, your client. That's absolutely income. When you invoice your bigger clients, I gave you the example that we have a mentee that invoices for bigger clients, but then just does pop-ups and sell. Those are all income related. If you are, let's say, online versus brick or mortar, money can come in different ways that way as well. And so someone said like product sales. So maybe you're using a point of sale system. Think about that. That's going to be something you're going to be capturing from money in. When it comes to non-income, yes, we have SBA loans. Absolutely. We have investments. Absolutely. So investments with partners, with shareholders, with other business owners. Someone put under non-income though 1099. I'm not sure about what you meant with that, but I don't, that seems incorrect, but I don't know what you mean. So maybe you want to think about that or explain that a little bit more. Because a 1099 income, if you're receiving money because you're a contractor at 1099, that's income. That's not non-income. A few other examples. So we have income that is digital sales. Absolutely. So we know the last 10 years, the digital sale era and in the education community blew up. We're $1 billion community now moving to $1 trillion community. I say we because I'm an educator. So I'm in that community too. I need a piece of that $1 trillion. And so that's big. Education, digital sales, digital products, all of that is income, absolutely. If you receive that money through PayPal, so I'll put PayPal. Absolutely. Affiliate programs. Yes, these are really great examples. Many times people think, well, I get commissions or I get affiliate fees. All of that is income. And so how are you getting that? How are you tracking that? So I also receive quite a bit of affiliate income when I'm actually selling some really cool products of my peers and my colleagues. I have to track that I'm receiving that money from all those different programs and partnerships, because then I have to report all of that, of course, on my books. Non-income, PACE. So PACE, thank you, PACE, for supporting your business owners. So it looks like PACE provides some type of grants or SBA loans. Thank you for that. Your own personal money getting put into the business. We said that already. Good job. Yes. So that's absolutely not income. That's you investing into the business. And so now I'm going to kind of just look at some of the questions because they're probably related to income here or money in. It says you still have to do reconciliations. Absolutely. So we haven't even covered that. We're not going to even talk about that at this point. But yes, to always build tax ready books. We started with money management, which is what we're focusing on today, all the way through to making sure the categorization is right, making sure you can sit down and look at your financial statements, hopefully with an accounting partner or a mentor, like for example, LaunchPad, to the point where you're reconciling your books every single month and then actually preparing for tax time, which is happening right now. So absolutely, that's all part of what I call your tax ready workflow. So there's a workflow to get yourself to being tax ready. We're just covering the tip of the iceberg here. Someone asked, do you have a preference around the different softwares? We can cover that in a little bit, maybe when I open it up for more questions. I just want to see if we can cover specifically around the income and the money in and money out. Let's see here. Let's see. Okay, I think that was it. I want to move
Mariette, there
yeah.
is a question in the Q&A about
Oh, in the
sharing
Q&A.
space with someone and they pay rent.
Perfect. Oh, thank you for mentioning it. I didn't see the Q&A. If I share space with someone and they pay me rent, okay. So I love this question, by the way. Okay. So if I share a space with someone and they pay me rent, I'm going to speak twice, okay? Because there's both situations. If they pay me rent, I just received rental income. So that is absolutely income. Okay. Now, because I worked a lot in the beauty industry, salons and barbers and beauty shops, if a beautician is renting a booth from the salon, they now are paying the rent. So now they are basically needing to 1099 the owner of the salon because they paid rent. So there's both ways. It's you getting paid rent, which is income. It's you paying rent, which is an expense. So and it can happen both ways in the same beauty shop. I've actually had both sides of the story in the same shop. And this could go with any type of facility or industry or business model where you basically have a space and people are paying you within that space. So it happens a lot also in those like remote work locations where people rent a space for, let's say, a desk or an office or something like that. This is very common now in this kind of hybrid virtual environment we're working in. So that's a very great example. I'm sure that applies to other people as well. Okay, so hopefully that answered your question. And yeah, so okay, WeWork example. So WeWork. So if you actually pay, and we're not going to go too much into 1099s because then this is a big conversation. You could follow me online. I have a lot of free stuff online on this. But so if you pay, let's say, for example, for a remote desk for your business. So you don't have an office. You actually now, just go and work out of an office like a WeWork. That's an expense to you. We're going to cover that right now in money out. Now, depending on the entity that you pay, you may or may not have tax 1099 compliance, which is basically having to fill out a tax form to say you pay them. The easiest way to say this for WeWork is if they are a corporation, you do not need a 1099 corporations. So that's why you wouldn't 1099 WeWork. But if you were renting like a space for me and I'm a personal sole proprietorship and you're just renting a room out of I have a bigger office and I've done that before and I've had like co-working spaces, you would 1099 me because I'm a sole proprietorship and you're renting an extra space out of my bigger office. And so you would 1099 me saying you paid me rent. And you need to do that for two reasons, just to be clear. Number one, the IRS wants to make sure I'm reporting that I got rental income. That's the big thing. But number two, for you to be able to validate and prove that you paid rent to somebody, that's how you can prove it. You can say, yeah, I paid Mariette $300 a month the entire year, and I 1099'd her. So it's proof that I paid Mariette for 12 months, $300 every month for rent. So I clearly can take that expense and deduct it with no problem because I have all the documentation to prove it. That's the reason why this is very important in regards to keeping that documentation. So, okay. Awesome. I think we did good in money in and money out. Money in, not money out yet. How about you, Anu or Joyce? Any final
Well,
input?
I just wanted to ask a clarification on that
Yeah.
question. If somebody is renting space, but they're sharing half of it with somebody else and they're just going to pay half the rent, would that not just be a pass through basically if they're paying you and not the landlord, but you're paying the landlord?
Yeah, it's such a great
That's
question,
not
Joyce.
income for you, right?
Yeah, well, and the reason why it's a great question is that the two of you need to decide whether you want that expense, right? If you do, then what ends up happening is like, can we just both separately pay so we both can have the expense? Or am I just passing it over to you and then you're paying the full thing? So that's a discussion to be had. You can't assume it's one or the other. It's a discussion to be had because I've had it where someone's like, oh, yeah, well, can't you just pay it all? And I'm like, well, but do you want the expense? Like, do you want to actually reflect that you're paying rent to look like a legitimate business? Because most businesses want legitimate expenses. And so, again, you need to think about what you're trying to do in your business. Are you trying to look more formalized? Are you trying to show that you have an office? Right? So there's like a bigger discussion to have, but it could be as simple as no, just I'm going to give it to you and you pay it all. But you have to have that conversation. Yeah, it's a great question. Okay, Anu, anything else?
I think we're good to move on.
Okay. Oh, you want to play this game anew?
Yeah, let's do it. Just to solidify the understanding of money in before we move on to money out. So let's do it.
Mm-hmm. All right, let's go. So everyone, y'all are superstars here. So you have an SBA loan quickly with your fingers. Is it one income? Is it two not income? You have an SBA loan. Yay! Congratulations, by the way, if you got an SBA loan. Is it one income or is it two not income? Let's see. I'm not going to tell you what I want to see, but maybe it's got little. Maybe it looks like this. I'm not sure. Yes, absolutely. Two. Wonderful. One. No, it is non-income. An SBA loan is two, non-income. Okay, let's do the next one. You guys are good. You're fast. Okay, so I kind of gave this one away already. But if you're doing a pop, everyone's okay. Y'all are too fast for me. Okay, yes, let's go. Yes, 111. Pop up at a farmer's market is absolutely one. Wonderful. Perfect. And now this is just something I want you to think about. Okay. And again, I try to give you a lot of concepts and really things to kind of noodle on before we get into our exercises because now I just want you to take action. But remember what I told you in regards to how money flows. So as you know now, an SBA loan looks very different than a pop-up, than an invoice from a customer, than a sale transaction so think about that. Think about how all of this is happening because, well, first of all, because I want you to think about it and I want you to document it. But more importantly, right now, because I do want to be very relevant to the time we're in. So right now we're filming this in January of 2026. And in January is what's called the busy 1099 season. And the reason that is because depending on how money is flowing in and out of your business, you may either be required to send a 1099 form or you may be receiving a 1099 form. And it's completely related to how the transaction happened. That's it. It's related to how the transaction happened, and the rules have become incredibly complex. So that's why I'm saying we're not going to cover that today. But depending on whether you got paid cash or check, or depending on whether you got paid credit card, or depending on whether you got paid with a third-party payment that feels like it's a credit card, but it's not. So it's actually like a cash. So you're like, wait, what? What's going on here? So I will see if Anu and Joyce are okay. I can drop a free resource that gives you kind of a decision tree on how to make that decision in regards to how the money coming in, or I'll ask for Tuhi if she wants me to share. But yes, think about that for a moment. It's not only from a documentation and a bookkeeping perspective, but specifically right now in the January of every year, it is highly and directly related to 1099s. So just I want to leave you with that for everyone. Okay. All right, that's it. I'm off the 1099 boat. And so we already did this, so let's move on. Okay, so now let's go to money out. So this is I think it's a little easier because now you all understand kind of the flow of what we're doing and how we're getting you to kind of think deeper into your business. Now there's a couple of things I do want to slow down and really help you understand from a money out perspective. Number one, again, that quick response, that quick, I know what money out is, Mariette. They're all my expenses. So yes, and. Right. So yes, most likely the first transactions that you think about when you think about expenses are, when you think about money out are expenses. But there are two types of expenses. There's the common business expenses. So we gave you some examples here. And then there's what I like to call the not so common business expenses. These are the ones you have to do a little bit more digging. These are your health insurance deductions, your home office deductions. These are your accountable plans if you're an S corporation. These are other type of, deeper expenses that you may have, be qualified to use and deduct and to report on your taxes, but they require more work. And hopefully if you are at that level, you're definitely working with an accounting professional. But I want you to think about that. So we can't just put it in a bucket called expenses. There's common business expenses, which you can clearly find online. You can find thousands of blogs that says what are common small business expenses. But then there are not so common business expenses that you may qualify for. Depreciation. What type of depreciation? Bonus depreciation, Section 179, double declining. Like all of these things are expenses possibly that you qualify for, but they take more work. So I want you to think about that. So again, these are just some examples. You can look at them if you want. Again, very simple and very straightforward, and you can find them in hundreds of blogs online. Okay, next slide. However, not all expenses are what? Not all money out are expenses, excuse me. So same idea, how not all money in is income, not all money out are expenses. So this is a shift. This is a shift from a business owner, right? Oh, Margarita, thank you. I love that you loved my energy. Okay. Okay, so by the way, I love your name, Margarita. I'm like, I'll celebrate with one of those later on. I'm just kidding. So withdraws, think about money getting pulled out of your business and think about why. Okay. Just thinking about money getting pulled out of my business, that got me a little nervous. Why is money getting pulled out of my business if it's not for an expense? So think about that. Why is money getting pulled out of your business? Hopefully, it's getting pulled out to pay yourself. So if you're a sole proprietorship, meaning you're not incorporated, meaning you're not a shareholder employee on your business, so you're not on payroll, clearly you should be paying yourself. Clearly, you should create a plan to pay yourself. So that's the most common one. Well, I have to pay myself. I have to pull money to survive. My livelihood, yes, absolutely. Is that an expense? No. Is that a common transaction that happens in a business? Yes. What other things may be common in a business that's not an expense, but it's money getting pulled out? How about when you're paying back your bank loans? How about when you're paying back your SBA loans? How about when you're paying your credit card, right? You've been, charging your card all month and now you're just paying it, right? So that is just money getting paid, transferred from your business operations to your business credit card. How about when your customers, you have customer refunds? Right? So what about when you have customer refunds? So now you have to pay your customer back. Yes, it happens to the best of us, right? No judgment if you have to refund a customer, but it's very common and very normal. And then also transactions usually related to owners and related to equity. That's where a lot of that money out, that's not an expense, but it would be in your books. It would be on your bank statement. So again, think about that for a moment. And then what are we going to do? We're going to go ahead and put our fingers to action. So let's go ahead to the next slide. And so now we're going to do the same thing. 2 minutes. I think 2 minutes was perfect for everyone. I saw you all kind of work through it. And then I loved how you were already sharing in the chat. So think about expenses now. So we're done with money in for a moment. Okay. We got to shift and think about money out. So as I shared before, other than expenses, or you can share expenses, right? Because maybe you have not so common expenses and you want to ask, hey, is this considered a not so common expense? So feel free to do that. Yeah. What about gifts to clients? LB, perfect. So add those in the chat. Perfect. We'll talk about those. But also think about what is clearly not an expense, but you are still paying it out of your business. So you want to make sure you know how to call that, how to post that, how to categorize that. Going back to the conversation between, doesn't a software do this? No, software doesn't know what's happening on your end. So you need to tell the software how to categorize a certain transaction based on how it comes in, based on the amount, based on the vendor. Then AI in the software will start doing that automatically for you. That's how AI works in the software. And so let's go ahead and think about that. So I am going to get quiet again. I'm going to pull up my timer. We're going to do 2 minutes and then we'll have a nice conversation about money out. Okay, starting now. Okay, you have about 50 more seconds. Okay, you have about 20 more seconds. You could either write it down or I see some of you are putting in the Q&A, some of you are putting in the chat. Doesn't matter where you put it, I will grab it. So wherever you want to put it. Okay, 2 minutes flies by. Okay, so let's have a conversation. I'll start looking at the great examples I see. But anything you want to share, Anu or Joyce? I know we do a lot of this work with our mentees. So anything you want to pop in and share before we start bringing in some examples?
I'm good.
Okay, awesome. All right, so I'm going to go with the Q&A and then I'm going to go with the great examples you're all putting in there. I love that. So we get a question, what about transaction fees? Like if they pay with a credit card and then the software, in this case, it said QuickBooks, but most accounting softwares charge you. Yes, that's absolutely your expense. And so you want to, in that, it's such a great example. I'm going to go a little deeper in that because that's an area that I have had to really work with my business clients on. So with most payment providers, so whether that's QuickBooks payments or now they're called Intuit payments or PayPal or Stripe or Square, even if let's say you're getting paid through Etsy, if you have an Etsy shop of some kind. So what you want to make sure that you are seeing on some type of summary report is that you're seeing your revenue and your transaction fees split up. And you really need to, take ownership of this because what happens is many times when it hits your bank account, you'll see the net transaction. You actually won't see revenue less fees equals that amount. You need to do when it comes in, going to that example of, well, doesn't my software do it? No, the software doesn't do it. The software gives you the net amount. And what you'll need to do is go back and split that because you'll never know how much you're paying in fees. There's times when I've had my clients do this project, kind of this is their exercise for the year because there's, I'm like, I can't stand paying fees. I'm like, well, how many fees? I don't know. I just pay them. I'm like, well, that doesn't help me or you to do any kind of analysis. So then I have them go back and do, yes, it's a little bit tedious, right, work to go separate their revenue, their expenses, and then they realize, oh, Mariette, I'm coming back and telling you, I don't like PayPal fees. Right? Or I don't like, because those are the ones where it's ridiculous how much I'm paying. But when I look at this one, I'm actually only paying a few dollars. Okay, so then how can we go ahead and maybe look for another vendor that doesn't charge 3, 4, 5%, whatever it is? So that's why we need to separate those transactions. And yes, are those transactions, the fees considered expense? Yes. But more importantly than that is let's separate those so you can see your revenue less the fee, which is the net transaction that's going to come into your bank account, which is really important. So hopefully that was helpful. And then let me just go back to some other examples that I saw. What about gifts to clients? Yes. So based on the tax code, you're going to want to definitely always either talk to the tax professional, but at this point, you can go online, go to the IRS website. They have amazing publications. Yes, you can use chat. But don't just trust what chat says. But chat's pretty smart at this point for those basic things like, there's a $25 gift limit per client, things like that. So just make sure it falls under the tax code. But absolutely, gifts to clients, marketing, promos, swag, all of that fun stuff is absolutely considered an expense and most likely could be 100% tax deductible as long as you're following the tax code. Credit card interest, absolutely, right? That's one of them that, again, when I do the analysis with my clients and they see all the different credit cards they have and how much they're paying in interest, big wake up call, right? They're like, okay, we're going to go ahead and consolidate this. This is just way too much that I'm paying in interest. So absolutely, we need to see that. Payroll absolutely is going to be an expense. Now with payroll, be mindful that depending on your payroll, if you are a sole proprietorship, you have employees possibly, but you're not on payroll, but your employees are. So then you'd have the one line item of payroll expenses, but within payroll expenses, you need to break that down in regards to their wages, in regards to employer taxes, in regards to health benefits. Somebody asked about health benefits or other type of benefits you give them. That needs to be separated in your books. So that way you can clearly see your full payroll expense. Having one line called payroll expense, unacceptable, everyone. There's no way you can do analysis on one of your biggest expenses in business, which is labor costs, if you have one bucket called payroll. Now, one thing that's really important that I'm going to mention, if you are an S Corp or a C Corp, you need to separate that even further because you're going to have officer salary, which is going to be one line. Then you're going to have everyone else's salary, which is employee salary. And then you're going to still have employer taxes, benefits, and all of that. So really important that you do that or you understand the concept. That could be even something that, let's say, if you were in our program, we would show you that. Like you only have one payroll account. We need to ask your mentor to help you to separate that between officers and employee because for tax purposes, of course you need that, but you should be seeing that year round. You should be posting your payroll separately like that every pay period, whether you're using an online payroll like a Gusto or an ADP or a Paychex. What happens is Paychex will just hit you with one lump sum, but when that lump sum comes in, you do what's called an allocation where you separate the transaction and you separate it into the different categories. And so really important. Again, that's part of that deeper bookkeeping that gets done when you're say getting set up for success. So that's what we do here at LaunchPad. For example, insurance, absolutely. I see a lot of people donations. That's a good one. So I see donations. It depends on your business entity type. So if you're what's called a pass-through, then it would actually be probably a donation on your personal return. So it would pass through, let's say if you did an S Corp donation, it passed through to your K1 and eventually passed through to your personal return or your sole proprietorship. It'd probably be on your Schedule A as a charitable donation from a personal perspective. So we need to understand your entity type. We also need to understand what type of donation it was. A lot of time from a business perspective, like I do a lot of sponsors. I sponsor a lot of teams, a lot of programs throughout the year. So I make it more of a marketing expense because I get I get swag, I do promo, I show up at the events, give the a marketing campaign. And so that falls under my marketing expense, not as a donation. So just think about how you're actually using that expense from a campaign perspective. Is it a donation or is it really marketing promotion? Like, what is it exactly? So I think there are some really great more examples. And since I have a little bit more time, let me just go through a few more, and then I'm just going to open up one more time for kind of open Q&A. So someone just went and shared everything. I loved it. So money out that are expenses, you put payroll, you put travel, you put meals. Very good. I love how you put meals and not meals and entertainment. So as y'all know, several years ago, I believe it was in 2017 or 18, I'm not sure the exact year, the IRS said no more meals and entertainment. It's just meals. And so you cannot expense entertainment. You can still go and entertain yourself and your clients, but that's not a deductible expense. So yes, it's just meals. Now, interesting enough, talking about software, for some reason, we can't convince the software companies to take off the chart of account. So a lot of times when you actually pull up the default chart of accounts of a software, it'll still say meals and entertainment, which is wrong. There's no such thing as meals and entertainment anymore. So you'll want to go ahead and separate that between meals and entertainment, because meals is deductible by 50% usually. Entertainment is zero deductible. So you have to separate that. Non-expenses would be bank fees. That's incorrect. Non-expenses, bank fees are absolutely going to be an expense. You want to take fees that you're paying for banks, for credit cards, for merchant services. Those are expenses. So we want to make sure we are taking that as an expense. Now, owner's withdrawals is a non-expense. So that's correct. Those of you that put that. And I noticed that some of you are just jumping ahead, which I love, which is the last thing we're going to cover here, which is where does everything live? Right? So someone already wrote them down. It lives on my bank statement. It lives on my credit card statement. It lives on my employee payroll reports. It lives on my invoice reports. Yes. So when you think about where all of this is going to eventually live and where you're going to pull all this data from, all of those reports is where all of this is going to be. So we're going to cover that in a minute. But before we do, again, just going to see if Anu or Joyce want to jump in for anything.
I think there's a couple more questions that might be worth touching on. Shareholder wages, and then is marketing expense a different category than a business expense?
Perfect. Okay, so let's do the easier one. So for marketing, marketing is very interesting. So when you start, wanting to get your name out there, right? Marketing, advertising, promotion, that's all really a growth strategy. So I'm happy that y'all are thinking about that. And so usually when it comes to marketing, that's really you kind of messaging. I always say with marketing, it's the message, your brand, your social media presence, that message you're getting out there to your ideal client that you're doing something. That's clearly marketing. Advertising is now let's paying for ads. So you're paying for ads, you're paying for, and maybe an ad agency. So you could possibly have that all fall under advertising. Some people do. I like to separate that, because I don't pay for ads. I don't need to, but I love marketing, right? I love promoting. I love creating all my brand images out there. I love to brand things and give them away. And so that's more marketing, not so much advertising. So you can put them in separate accounts, or you can put them in the same account. It really depends on how you see it. And of course, if you're working with an accounting or bookkeeping professional or a tax professional, of course, at year end, they may say, hey, why do you have so many accounts? Just call it all advertising. Stop making my life confusing. So sometimes they'll just have you put it all in there. But remember, this is your business. So you choose how you want to create your categories. Don't let your accountant choose that. Let them support you on it and mentor you on it, but you get to choose how you want to see your business. When it comes to shareholder wages, really important. Yes, someone put their shareholder wages, very important. Yes. So let me slow down for a minute on that. So I'm going to give you an example of an S Corp corporation, because many people evolve. They start as sole prop, then they choose to be a sole prop filing as a limited liability company, that's the legal qualification. And that's a legal identification is a limited liability company, but you're still a sole prop. But then you decide to elect to be an S corporation. Okay, that's kind of the progression of many common progressions for business owners. Now you went ahead and elected to be an S corp, so now you are an S corporation for tax purposes, and you're filing an S corp return. There's a lot of things that come with that, but one of them is that now you became a shareholder of your business, and that's how you have to report on your books and on your taxes. So you need to pay yourself what's called a reasonable compensation. Very important. So when I say pay yourself, I'm no longer talking about pulling money out of the business. I'm talking about being on payroll. So engaging with ADP, Paycheck, Gusto, whatever payroll company you want, and having them put you on payroll and choosing what you want that amount to be, which needs to be reasonable based on what you do for the business. Let's say it's 20 grand a month. And then at the end of the year, let's say throughout the year, you're doing really great and you hire 2 employees. So then at the end of the year on your profit and loss statement, you're going to have a whole area that's called payroll expense. Think of it like a block. And under that payroll expense, you're going to have line items, the different categories, the different accounts. One's going to say officer salaries. The other one's going to say employees' salaries or wages, however you want to call it. And then all of the other expenses related. So that's what I mean. You have to separate that out. The officer salary is the same thing as shareholder wages because you're the shareholder of the business. So I want to make sure you understand that. Okay, let's see. We got a couple more questions. Is it better to convert over to S Corp? That's a very big question. That's something you want to talk to your accounting and tax professional about. There are benefits to it, and there are also, pros and cons. So that's something you want to definitely go deeper in with your tax and accounting professional. Yes, of course. C corporations absolutely are officers as well. So same thing, separate payroll, the block with the officer salary, the employee salary, same concept for a C corp and an S corp. Yes, absolutely. This is different though, just so you don't confuse it. Sole proprietor wouldn't look like that. A partnership wouldn't look like that either because partners are not on payroll. Partners get something else. So I'm not going to go there, but I just want to make sure that's clear. Will the mentorship help me get on payroll? Anu, did you want to jump in for that?
We don't specifically focus on payroll at this moment. The LaunchPad program, which I'm going to talk about in just a bit, is focused on helping you really build the muscles around understanding and starting to, just get into your bookkeeping and building those bookkeeping skills. However, depending on the mentor you get, and we also have drop-in clinics every Monday that you're welcome to drop into once you join the program. It's a Zoom call for an hour with the team that you're seeing here, Joyce, Merritt, and myself. You can bring your questions and we'd be happy to sort of help answer as best as we can. But specifically, the program does not get into payroll.
Yes. Yes, exactly. Yeah, because we're mentoring you. So we'll provide you guidance that needs to be done. And then you would either engage with a payroll company, which is, I always feel like I don't understand why any business owner would ever want to do payroll. I'm an accountant and I've never done my own payroll. I always engage with a payroll service. So it's just best practices. A couple other questions I just want to answer because we definitely want to answer every question people share. In the Q&A, I use ticket services like Eventbrite, Partyful, and they have the options for me to absorb the fee rather than charge the customer. If I absorb the fee, then do I expense it? The answer is yes. But again, this goes back to what I shared about 5 minutes ago. If you're not separating that website will only show you net. It actually won't show you many times the separate between what you would have received gross minus the fee you absorbed, what you paid basically, and then the net. You'll have to go ahead and create a workflow to separate that so you can see how much fees you're paying. Also, what's really important with that, I just want to note, this is really important, depending on your state that you're in, charging the credit card back to the customer may not be legal. So you need to be aware of that. There's actually rules around whether or not you could charge back a credit card fee back to the customer. So make sure you're checking with your state on that, whether you can actually charge back the fee to your customer. Usually when you're paying for a merchant service, we have to absorb that expense. We're the one that chose to use a credit card company. We have to pay the credit card fee. That's common, but there are some instances when you can push it back to the customer. You just need to go ahead and research that. What's the rule in California? You can actually go ahead and look it up. I just shared it with someone. I can see if I can find the resource, put it in here. Just look for credit card chargebacks per state, and then you'll see what the rules are by state. There's a couple other ones. Someone said expenses are rent, utilities, travel, food. How about savings? No, savings is not an expense. Savings is money out because you're pulling the money out of the business or you're putting money to the side, right? Which is very smart, by the way. Congratulations that you're thinking about pulling money to save, pulling money to reinvest in your business, pulling money away for your taxes, please, right? That really follows a very well-known concept called profit first, where you are pulling the money out and you're putting them in buckets or envelopes. Remember back in the day when my mom owned a chain of restaurants and she used to teach me the envelope system where you have to put your money in the Spanish, your sobres, put them in your sobres, put them away. And then when you're ready to pay things, all the money is there. Same concept, but that's not an expense. That's you being very responsible financially with your business and pulling the money out, maybe putting it in separate business accounts and then using that to pay, let's say, your taxes or to pay for a big purchase. So that's separate than an expense. But it's if you're doing that, wonderful. Like that's amazing that you're doing that. I think that's it. Someone asked, what is available for less than 20,000? I'm not sure what that means. So
I think she might be asking about the revenue range in terms of who LaunchPad supports. And Jennifer, we're going to get into that when we talk about the LaunchPad program in more detail in just a few slides. If you could just hold on, that would be awesome.
Okay, so we're gonna just wrap you up. So if we can go to the next slide. This was fun. Let's play it again because I loved seeing everybody get all excited. So let's play this game again. So owner's pay. I mean, I definitely have talked about this a lot. So one is an expense, two is a non-expense. Caveat here, this is a sole proprietorship. So a sole proprietor is pulling money aside to pay themselves. Is that an expense one or is that a non-expense two? A sole proprietorship is pulling money out of the business so they can pay themselves, but they're a sole proprietorship. Is that one an expense, two a non-expense? No judgment, guys. This is something that is very confusing for many businesses until they learn that literacy. So yes, I see 1, 2, 1, 2, 1, 2. I feel like I should say like 6, 7, but no, I'm not quite there. So 1, 2, yes, I totally understand this. And let me talk to you, LB, in 1 minute, because that's what I always hear from everybody. For this particular example, the answer is absolutely 2. Okay, non-expense. If a sole proprietorship, which is the tax entity type, pulls money out of the business, we're talking about the envelope system, right? They're doing that to go ahead and pay themselves or maybe pay their taxes or save for a rainy day. That is not an expense. That's them pulling out of their own profit. So that's 2. Now, if they're a sole proprietorship that went ahead and formalized at a limited liability company, right? They're still a sole proprietorship for tax purposes. So it's still number 2. So that's where the confusion happens. Well, now I became an LLC. Did it change? No, it didn't change. The only time that changes if you completely change to, let's say, to be an S Corp or a C Corp. Now you're not owner's pay, you're officer's salary, your compensation, you're on payroll. Completely different situation. And again, very common that this is sometimes confusing for people because unless you've learned it, we were talking about literacy, this is something that is a very gray area for many, many business owners. So just want to be very open about that. Okay, next. Office supplies. Okay, we're going to end on an easy note. Okay, guys? So you went out, you bought some office supplies. What is it? 1 or 2? 1 or 2 office supplies. Yes. I'm like, does anyone buy office supplies? We do. We still buy office supplies because we're nerdy with paper and pens. So yes, everyone, yes, number one. Okay, I love that. We ended on a really good note. Okay, next slide. And then we already did that. We had them do their turn. So the last thing I just wanted to mention here, next slide, is that I've given you a lot of examples, okay, on purpose. And we didn't show you this big old spreadsheet, which was, again, like I said, on your spreadsheet on the second slide, we give you a lot of examples. I wanted to talk through the examples in today's session because I wanted you all to tell me what was going on your end. But yes, of course, there's a lot of examples out there. We've given you examples. You can go back and watch this replay, probably on slow mode and hear a lot of the things we talked about. But as these examples are coming up, I want you to think about what applies to you. Because that's what happens a lot is that you come to a class like this, which thank you for being here. Thank you for Tuhi for letting us be here and provide this literacy. But I want this to apply to you. So now when you go back to your spreadsheet, add on your notes the more the better, right? Add more details. What applies to you? What makes sense? What came through you in this session that you were like, I didn't even really know that that was money in, or I didn't know I had to separate my revenue from my fees to see my full net transaction. So write all of that now that you have some momentum. And if you're still got to have energy after this session, do it within the next day. Please go and pull up that spreadsheet, add all of that information in your notes. And this would be, I'm telling you, if you were my client and I was your accountant and you came with this, I would be blown away. Okay, because most business owners do not come this prepared to their sessions. So that's all I want to do. Congratulations, everybody, for making it through our exercise. And I'm going to hand it back to the LaunchPad team.
Wonderful. Thank you so much, Marriott. I hope you can catch your breath now. A lot of talking. If there are still questions, please put them in chat, and we will definitely make sure we cover everything before we leave today. But I do want to take just a few minutes to touch on the LaunchPad program and answer some of the questions that have come up so far, tell you a little bit more about what we offer in case it makes sense for you or for someone you know who could benefit from the program and what we offer. I want to make sure you have all the details before you leave today. So just a few slides to give you the details, and then we can open up for questions again. So Joyce had mentioned at the beginning that the LaunchPad program is what? What did you guys take away from Joyce's mention in the beginning? Anything come to mind? And if you have thoughts, if you remember something, just put it in chat. What is LaunchPad? It is awesome. All right, let me remind everyone. LaunchPad is a 4-month free mentorship program. Yes, Janine, thank you. Where you're working directly one-on-one with a mentor who is a professional bookkeeper who is going to be helping you with getting your arms around your bookkeeping. Not generic bookkeeping, not your aunt's bookkeeping, your small business bookkeeping. It's mentorship, exactly. It is not a class, which means they're going to be teaching you, your bookkeeper who's assigned to you is going to be teaching you, showing you, guiding you, answering your questions. But who is going to be in the driver's seat? And again, put it in chat for me. You or the mentor? Who's in the driver's seat during a mentorship? You, yes, exactly. The small business, the entrepreneur, because we want you to learn the skills. We want you to understand your books so that when QuickBooks comes back with a report and you're looking at your P&L, you're looking at your balance sheet, you're looking at your cash flow, you can point out, hey, QuickBooks didn't get this right. QuickBooks messed this up. What's going on here, right? And then good luck getting support from them. So understanding your books and really knowing what's going on behind the covers is really important and the first step to making sure that you are successful, because the numbers are really scary. And if any of you have looked at the statistics around small business survival, it's daunting. 1 out of 2 small businesses won't make it past the 5-year mark, right? And so in 5 years, half of you may not be around if you don't understand your numbers, if you don't understand your finances. And we're here to fix that. We're here to change that story and make sure that all of you survive, and not just survive, but thrive. And the starting point for that is really understanding what's happening with your business and your numbers. And so that's what this program is about. And the process looks like this. So when you're ready, and if you think this is the right program for you, and I'll tell you more about who qualifies on the next slide, the first step is to become program ready. And that involves applying to the program on our website, and I'll share the link at the end. So you fill out an online application. It's a very simple, short form. You tell us a little bit about your business, how much revenue you have today, whether you're using accounting software, what's your mentorship priority? Like, what are you looking to learn from the program? What's the highest priority for you? So we want to learn a little bit about you and your business. And that application comes directly to us. We review it. And if you seem like a good fit, we will accept you into the program, and you will receive an email with a program readiness checklist. which is a checklist of tasks that you need to complete on your own. And when you have done that and you run into questions or you're not sure about something, we invite you to join us weekly at a drop-in clinic that I mentioned earlier that's run by Mariette and myself and Joyce. And you can come and bring all your questions. We run those 11 to 12 on Monday over Zoom, every Monday. Or you can join our WhatsApp group if you can't come during that time and ask us your questions that way. And the whole idea here is to make sure that you complete your checklist so that you are program ready to be matched with a mentor. And when you get to that point, when you feel like, okay, I'm done with my checklist, I'm ready to go, then you schedule a 15-minute live interview with us where we review your progress, including reviewing your MIMO worksheet, which you all just completed. So you've already checked that off your checklist, which is awesome. We also have some other really important things that we have you do, such as set up and organize your digital filing system, watch a couple of classes that are recorded by Mariette so you can learn more about some of the topics that we covered today and more around your bookkeeping, just the foundations, the basics, so that when you are meeting with a bookkeeper, you're both starting to talk the same language, the same vocabulary. We also want to make sure you have an EIN, that you've separated your personal and business accounts. So we have you sort of go through all of that in the checklist and review that in the 15-minute live interview when we talk. After your live interview, if all goes well and if you're ready, then we go ahead and find you a mentor that is as closely aligned with your interests, your background, your skills, and your needs as we can. And at that point, you'll have 4 months to work directly with your mentor. We will send you some additional information in terms of program milestones that you're going to be covering together. Your mentor is going to be tracking your progress. And we also are going to encourage you to stay on top of your time, right? So your mentor is going to send you a calendar with their availability. But at that point, it's up to you to make sure that you are scheduling that time, because that 4 months is going to go by very, very quickly, right? So you want to make sure you're really taking good advantage of that time, scheduling your meetings ahead of time so that you're not wasting time trying to schedule things in the last minute. And we recommend, as good practice, to have weekly sessions at the beginning, and then maybe at the 2-month mark, switch to bi-weekly sessions. And that's just a recommendation, but you're welcome to set things up in a way that works for you and your mentor and have that conversation at the beginning so you're not delaying that conversation till when it's really urgent. And as you're going through the mentorship, there is one request that we have as the LaunchPad team, which is we want to hear how it's going. Is it working out? Are you having trouble? Is this not a good fit? Is it a great fit? Like, let us know. We'll send you a couple of surveys, but we also are available through chat. We're available in that drop-in clinic every Monday. So let us know how it's going so that we can continue to improve the program as we move forward. And at the end of the program, if you've shown up beautifully, if you've done the work with your mentor to complete your milestones, and you've completed your end of program survey, then we will have your mentor recommend you for a $500 grant. And we will have them also let us know how it went from their perspective so that we can make sure that we are hearing it from both sides and continue to make the program effective going forward for all entrepreneurs joining the program in the future. So that's a little bit about how it works. I'm happy to answer more questions about that at the end for anyone who has questions. But here's a little bit about who we're looking for as we think about the right profile of entrepreneurs that we want to attract to the program. So the key is that your revenue range should be in that window of 20,000 to 400,000. And if you're under 20,000, you're still welcome to apply. There's a lot of good best practices and tools and learning that you can have as part of the program readiness journey that you're going to go through with us. And depending on our priorities and our needs, we still may decide to match you up with someone, or we might ask you to hang on and come to the clinics every week to get your questions answered. Wait till you have more of a need for bookkeeping before we get you connected to a mentor. But that's the conversation we can have directly with you once you join the program. So don't hesitate to apply if you're under 20,000. But if you get to be over 400,000, that's when things started to get more challenging because your needs are more complex. You need more support. And at that point, we're getting beyond the scope of foundational skills support, which is what we're here to provide. And at that point, we would recommend that you find a full-time bookkeeper to help you, make sure that you're well taken care of. Other things we look for, aspiration to grow. So if you apply to us and you're looking to hire employees in the future, if you have a real desire to build strong financial habits, you're open to using technology and learning and growing, but feeling challenged to hire someone yourself at this moment, and have a basic understanding of English because we're going to be working with English-based software systems, and willing to give us feedback along the way, this is the right program for you. And we really, really hope you will apply. The program is free. There is no charge for it. In fact, at the end of the program, as I mentioned earlier, we're going to pay you $500 in grant for putting this investment towards your financial success. And we're excited to sort of have you on this journey with us if this makes sense for you. Here's a glimpse at that checklist that you're going to be completing on your own. It's really important that you set aside time to do this work well. We've had some mentees complete this in a week, and some mentees have taken months, right? So it's you work through the checklist at your own pace. But again, we're not going to connect you to a mentor until you show us progress against all the items on this checklist. So it's up to you to decide how badly do you want to start working with a mentor and do the work to show up prepared so we can be confident in the match that we make for you with the mentor. And so the next steps are that we encourage you to go to our website, makahakama.org/launchpad. Joyce, maybe you can put the link directly in chat so everyone has easy access to it. The foundation, Makahakama Foundation, is co-founded by Joyce and her husband, Renee Lessert, and they have been very generous in funding the program. We're in our second year now, and we're so grateful for their support and their generosity and really believing in supporting and uplifting the next generation of entrepreneurs, and that is all of you. So take advantage of this incredible opportunity. There's no fee to you. We're going to support you. We're going to pay you that grant at the end to make sure that you're investing in your own financial success. Once you apply, we will check out your application. If you're accepted, we'll send you the checklist. Finish the checklist, come to us with questions, let us help you through it. And then when you're ready, we'll go ahead and connect you with your mentor for the 4 months of free mentorship. And mentorship, working with a bookkeeper is not, it's not, it's not, what's the right word? Cheap, right? I mean, bookkeepers, Merit, you were saying the other day, could be $1,000 a month, right? So that's a lot of value that you're getting just in the mentorship. And in addition to that, you're getting the grant and a lot of success support along the way with all of your questions. So we really, really hope you will take advantage of this, come to us with questions, let us know how we can support you, and please spread the word. We are growing the program. We want to help as many entrepreneurs as we can across California, across the country. And so we really would welcome all of your referrals, and Marriott promises she will slow down. So that's good. All righty. And yes, you can become a mentor. So if you are a bookkeeping professional and you want to give back to the community, please join the program as a mentor. There's a link to apply as a mentor on the website. And we do pay our bookkeepers for supporting our mentees. So you can learn more about that as part of your application process. And I will stop talking there. We have plenty of time for questions. So let me just see what's come up. Joyce, go ahead.
Just one more thing is, if you do decide to apply on the website, the application will ask you who you were referred by. And since PACE organized this wonderful program for us today, there'll be an option for you to select PACE LA. So don't forget to do that.
Yeah.
Thank you, Joyce, for the reminder.
Mm-hmm.
Oh, we would have cross-referenced your name and made sure that whoever is here is going to save our tuhi, because we know it's all you here. This energy, I will say, and can keep on asking your questions, everyone, but I will say that the energy in this room has been incredible. Virtual sessions are not as easy because you're trying to pull in the energy, but you guys all came with the best energy, very engaging. I know it felt fast, but the reason why I go a little fast, just so you all know, is that the businesses are at different levels. I saw people saying they were over 400 grand. There's some people that say they're at 20 grand. So this could have felt maybe more, fundamental for some, or some of you, it could have felt just right. And for some of you, it could have felt way over your head and too fast. So, so that's why we try to find that happy medium. But in LaunchPad, the whole point is to fill the gaps, right? We're not trying to get you to go fast. We're actually in LaunchPad trying to get you to slow down, because we'll get businesses that went too fast their first year or two. They missed so many things, so many fundamental, foundational, areas of their business. And so in LaunchPad, we want you to slow down so you can speed up. Like, that is the goal. And so I just wanted to mention that. Yeah, that's really what the mentorship is about. And then you can speed up and you can choose as a new share. And I think Joyce even said, if you are ready after the 4 months to engage with even the bookkeeper that's helping you, you can connect with them. If you are ready to engage with a larger, maybe a CPA practice or another accounting partner that you've been wanting to kind of think to work with them, but you're not sure if you're ready. Like, that's all where we want you to be after the 4 months. And yes, it takes 4 months. Like, it could take even longer than 4 months, but we also don't want to hold you too long. We want you to fly and we want you to grow. And so it seemed at this point, I think the 4 month has been a beautiful transition time for you to go through the program and then really just like relaunch and be refocused on where you want your business to go. So yeah, super, super excited to have you all look at it. And yes, I know it sounds crazy that it's free, but it's not free. It's funded by an amazing organization. So we got to be clear about that. It's funded by an organization, and it's at this point free for you to participate. So I appreciate Joyce and Anu and Vartuhi too, that work in organizations that allow us to have resources like this. So thank you for that.
Yeah. Couple more questions. Go ahead, Vartuhi.
There is an interesting question asking, like, if they are participating in this program and if they get the grant or 500 or 4,000, is it an income?
Marriott, you're on mute.
You're mute, Marriott.
I love that. I love the full circle moment there. And yes, grants are not income. So you should be okay. Yeah, grant.
Actually, I just want to mention this, that it depends on the grant. There are grants that they are income, like, so the grants which we get from the city, from the county, if they ask you to complete Form W-9, it will be an income. You have to make sure that you will report it. So just like a clarification, not
You're right.
all the grants are free.
Yeah.
Yes.
Our mentors actually do fill out the W-9, and for them it is income when we pay them for working with our mentees. But I think for our mentees, it's not.
Yes. You're right. Absolutely, Anu. You're right. Both of you. It's one of those. It depends, because you think grants are not, but you're right. It depends on the organization.
Exactly. It depends on the type of grant, the funds. So better to ask.
Yeah, definitely better to ask. And Jesse, I want to just address your question, which is, if you just don't know how much you're making right now, which is why you're here, I really encourage you to apply, right? Let's start working through the program. Let's see where you get to with your program readiness checklist. And depending on what we learn about your business and your different transactions, we can together determine if this is the right fit for you or not. And if it's not, we're happy to recommend other resources for you. So I don't want you to, if you don't know, if you're clearly like, I just don't know, that's okay. Just apply and we'll work it out.
Yes, absolutely. This is definitely your time to ask any questions at all, any questions related to the content, any questions related to LaunchPad, any questions in the scope of what we covered. We don't want to go too crazy out of the scope, because we know that it can get very big, but yeah, we're going to be here. That's why we had a little extra time. We don't have to stay, but we do want to make sure there's enough cushion. Vartuhi, did you want to share anything? I want to make sure that whatever resources or the surveys and things that you talk about.
No, I just wanted to mention, like, we can, if anyone wants to ask a question, we can now unmute, we can let them to unmute and, ask the question if there's anything like, any other question.
Yes.
I think there were a couple here that I don't know have been addressed. Letitia was asking about a relaunch. And again, I guess I would circle back to what Anu said, that I would encourage you just to apply and explain your situation. as long as you're sort of roughly within the revenue ranges. I think that's something we would definitely consider and see if it is a fit. There isn't necessarily a way to say, oh, well, I need to go back and fix 5 years of taxes. That's kind of out of scope of our program. So it really sort of depends on what your current needs are. And then the other question I saw here for Mariette would be a preference between software, between QuickBooks, Xero, or Wave.
Yeah. I'll share that one now since we kind of finished the program content. So and then I'll kind of add to what Joy said because it goes well with what we've been experiencing with our own mentees. So depending on where you're at in your business, let's say you're coming in and you started in 2024, right? So when we started accepting applicants in 2025, just to give you a real example, like there are going to be things that we can teach you in 2025 to get your books in order, to be tax ready, to learn again the chart of accounts, maybe reset your chart of accounts and get all the way through 2025 because that was the year we were focusing on. And now you have the tools and the knowledge to go back and do 2024. So I just want you to know there's times where it's like, oh, well, now, so do I need to catch up on everything and do I have to start at January 1st, 2026? No. So to Anu and Joyce's point, like if you believe this is something you need and that you fit, the overall qualifications, let us walk you through it. There's been times where we've even had our mentees just join the office hours, like just join the office hours. We can assist you there. And you're kind of getting ready for the program. And then once you're ready for the program, then you officially join the program. So we definitely want you to consider sharing your situation if you feel like you're close enough. I mean, if you're making $600,000, no, that doesn't qualify. But we definitely want you to consider yourself as a candidate if you're really close to what Anu has shared about our program. So I just want to share that. Also, do I have a preference in the softwares? Before I answer, Anu, were you going to say something specifically about that? Because you unmuted.
No.
Oh, okay. Okay, perfect. So yeah, with softwares, it's a bigger conversation. And I think how I want to really just kind of position myself in regards to softwares is in regards to what I shared like earlier today. Like softwares is a preference. Right? Technology is a preference. I mean, even between Anu, myself, and Joyce, we were talking about some account payable software, and Joyce is like, well, this one's really easy. Why do we have to use that other one? And I said, well, this one seems easy to me, so we're going to use this. So it's really just a preference of what you want to use. And that's on you. It's also on, and I'll say on who you want to engage with. So for the last, to be clear, like 20 plus years, most people have chosen QuickBooks because they can easily engage with an accounting professional that knows QuickBooks. So that's why they just by default choose QuickBooks, because they can find what's called a QuickBooks Pro Advisor or an expert in QuickBooks or someone that supports QuickBooks. Over the last 10 years, you can also find people that know Xero. So if that's the software that you're considering, you can find someone that knows Xero. Over the last 5 years, there are people that know FreshBooks now. So of course, if you want to eventually engage with someone because you want to stay in your lane of bringing in income, growing your business, marketing, all the things, the fun things we're talking about, and not doing the bookkeeping, because eventually you really shouldn't do your own bookkeeping, you'll want to engage with someone that actually can support your software. So that's another reason why people choose the software, because they're like, oh, I have the perfect bookkeeper and she says she does Xero. So obviously I want to use Xero because eventually I'm going to work with her, something like that. So just keep that in mind as well. It's really what you like and what eventually you'll probably want to get support with. And so that's why you would choose a specific software. So hopefully that's helpful. And then is there a promo code for QuickBooks? We do have a promo code. I don't know, I'll ask the ladies if she wants me to share it. So we do have a promo code if you know for sure you want to use it. So I'll see if we could share that. And then the last thing is there a preference between desktop and online? I'll just say, don't do desktop. It's going away. Intuit has made it very clear they are no longer investing in their desktop product. So you're not going to purchase a product that is not being invested in. So yeah, it's as easy as that.
Yeah. And Jesse, we will share the promo code. Like once I noticed that you just applied. So we will share all of that with you once you're in. So excited to have you on the journey.
Anu, there is a question in regards of like if there is any like the office hours that you have, if there's any Zoom link or it's in person.
Thank you. So Kelly, once you apply and we accept you into the program, we will send you an email which will have access to the checklist that I mentioned. It'll have a link to sign up for the Monday office hours, and you get to register on a weekly basis. So you have to sort of, pick the week you want to come. You can come every week. You can come once. It's up to you. But that link will be, it's a Luma link, and it will be included in the email where you can sign up. And we'll also give you access to our WhatsApp that you can join to ask real-time questions. If you can't come on Monday, you can reach us at any time. So all of that will be shared once you apply to the program. We'll hang for a few more minutes if there's any additional questions. But this has been really lovely. Thank you all for sticking with us. It was a long, long workshop, and we really, really are grateful for your time. Yes, Jesse. So if you don't,
I will just mention real quick. In the workshop in the worksheet, there's a little gift for you. Not that you want to hear my voice again. So I wouldn't want to hear my voice after these many hours. But for those of you that wanted to slow down a little bit, so there is actually a bonus video on the very top of the worksheet that goes through what I just shared a lot slower. And I even have a moment to pause and say, go ahead and pause and do your work. So you can watch that again, probably not today because it's pretty much what we covered today. But it's good if you do want to do this worksheet. The other thing I did want to mention, somebody asked, would I do this if I already have my stuff in QuickBooks? My answer, again, I'm going to speak for myself right now. I do this all the time. Actually, the girls and I, when they were talking about what can we give to our members, we kind of created this together, co-created this together a couple of months into the mentorship. And I'm like, here is what I do with my business and my clients. I want them to write things down. I don't want them to depend solely on technology, right? Like I want them to reflect and write down and put pen to paper. And so when I do this for my own business and especially with my clients, so many things come up because our businesses shift over the years. So for example, my first few years in business, I didn't have affiliate partnerships. I didn't have additional income streams. As my business has shifted, my business model has shifted. When I do this at the beginning, I usually do it at the end of the year, the beginning of the following year. I'm like, oh my gosh, I have a whole new income stream now. And that makes me go back to my software and add all of those new categories. So I personally prefer to do this first and then move that over into my software because it's how I find my gaps. So to answer that question, someone asked that, like, why would I do this if I already have it in the software? That's why I do it, because this is really my way of reflecting back, kind of like if you journal before the year end or at beginning of the year. This is my financial journal. Let's say it's my way to kind of pull back, see my business as a whole, and then go back and open that software and make those adjustments. So I just wanted to respond to that question. Yeah.
Cindy also had a question about, is the program going to show me how to do the bank reconciliation and how to move unapplied cash or invoice? Mary, do you want to talk to that?
Yeah. So I think let's just be clear on the program. So the program is ideally kind of two parts. The first part, which I would think is, it's kind of, if we put it like 100%, this would be like 10, 15% of it is the program readiness part, the one we were talking about, which is Mimo's part of it, right? Mimo's part of it, give you some exercises, giving you some literacy. You'll have a couple of training classes. You have the open hours, which we support you on. And by the way, you can come to the open hours even after you're matched. So that is really kind of that 10, 15% of the program. Then the rest of it, the other like 75% of the program, 80% is you being with your mentor. And you and your mentor are going to create your own goals. So depending on where you're at with the business, if your goals are, well, Mariette, I need to understand basic financial literacy and I need to understand bookkeeping workflows. You were talking about reconciliations. I need to know how to do that. You were talking about how I have money coming in from different accounts. I need to understand how that flows and how to post that. So those goals and priorities in regards to your business and how you want to build out your finances is what you're going to work with your mentor on. So that's the other part of the program. So yeah, can learn how to do bank recs be part of your milestones? Absolutely. Like that's how you validate your data and that's how you eventually get to your financial statements. And so That is usually a milestone by default, is learning how to close the books, learning how to reconcile, learning how to look at your financials. But maybe you have to do special reconciliations. A special reconciliation, an example of that is if you have payroll, you actually have to look at your payroll transactions in your books and reconcile that with your payroll summary report. Somebody already put that in the list of things that they were looking at, their payroll summary reports. That's a special reconciliation. So if you have that, you would let your mentor know, hey, I have payroll. Can we do special reconciliations for payroll? Sales taxes is another one. If you have sales taxes, you need to do sales tax reconciliation between your sales and your sales tax liability. That's another thing you're going to put on your milestone list with your mentor. So even though you're going to get a overall program milestone, what I want you to understand is that you can really customize that based on your business model, as long as it's in scope, as long as it's in scope of what we provide as mentorship. So hopefully that answers your question. Oh, and then I saw one about what are the credentials of the mentors. So great question. So our all our mentors at this point, as we're bringing them in, and again, mentors, we're bringing in mentors every day. So if you want to see if you qualify, we want them to have some specialties in the softwares for sure. So we want to make sure they're either QuickBooks Pro Advisor or a Zero certified or FreshBooks certified. We want to make sure that most of them, if not all of them, I think at this point, they have their own bookkeeping practices. So they engage in bookkeeping with other businesses, but this is something they're doing for bigger impact and to give back. So this is not solely their only source of income, right? And many times they're very seasoned professionals. They've been doing bookkeeping for, 3, 4, 5+ years. We have some mentors that have been doing bookkeeping and accounting for over 10 years. So definitely qualified. And then Anu, myself, and Joyce, we also have mentor check-ins and opportunities to see how they're doing and how we could support our mentors as well. So when the mentorship starts with the mentee and the mentorship, don't think that we're like, go have at it. No, no, no. We're checking in with our mentor. We're asking them how they're doing. We're asking our mentor how we can support the relationship between the mentor and the mentee. So we stay involved at a high level from their very beginning until the very last session you have with your mentor.
Faith, you mentioned you have a business partner. Yes, they can join as well. This is really designed to help you primarily, make sure you're getting the support you need. But it's perfectly fine. We had someone join where they had a accountant trainee, and they just joined the Zoom meetings together. All these sessions are happening over Zoom. So if you need to have another member of your team listening in, that's perfectly fine.
That's an interesting one, Anu and Joyce. Maybe that's something we can think about. Is there a certificate at the end of the program? I mean, clear we can make one, I'm sure. So that's I love that too. I love to show a graduate from this program. So Sydney,
Yeah,
we're gonna definitely
definitely
talk
think about that.
Yeah,
Definitely
let's think about that. A couple other questions. Haven't filed for 2025 yet, so I am not exactly sure if income is in the ranges. It doesn't matter if you filed your 2025 because 25 just happened, but has your income changed significantly between 2025 and 2026? I guess that we need a little bit more. Like, let's say, for example, it's going to change a few $1,000s, but if you're going from 300,000 to 600,000 or even 500,000, then that would be a big range change. So probably something you just want to discuss with the new to be sure about that. Completed the survey. Yes. By the way, everyone, there's still 6 minutes for those of you. I would say, Vartuhi, do you want to throw your survey in here? Do they have access to it? Because I want them to complete.
The survey will pop up once they close it.
Oh, okay.
Once they exit, it will pop up. So please just remember to complete the survey.
Okay, perfect. Okay, cool. Okay, because I think they meant they completed the application because someone said they completed the survey. I'm like, good job. Okay, yeah, so don't leave too fast. Complete Vartuhi's survey, please. They're very important, by the way. Surveys are really helpful for us organizations. So
exactly.
How many people are using the program right now? Do you want to share that, Anu?
We have a really it's growing every day. So we piloted the program in 2024. We've had over 70 applications come in since July when we relaunched, and we're adding more entrepreneurs every day. So, and some of them have been matched, some of them are in process, some of them we declined because they want a good fit. But again, the program is just starting to grow, and we're really excited to bring it to more entrepreneurs in California and across the country.
Yes. Let me see if I can read this one real fast. Okay, I have a sole prop that started in 2015. I think they meant 2015, not 2025. So I have to double check. And then an LLC started in 2024. Would I apply separately for each business? This is probably why I'm so confused, separating the two business types. Okay. Yeah, Kelly, I would say that would be, you'd want to talk to our team about that. Because it depends on like what were you doing between 2015 and 2020, let's say four. And then if you started a whole new set of books, let's say in 2024 to on, that sounds like it may be a conversation we're going to have outside of the chat. But definitely, I would say if you feel like you qualify everywhere else other than this seems like a nuance, then definitely talk to the team about that. And Ray, I agree. People and bankers love certificates. Everybody loves certificates. Like we love to check that off and feel complete, certificate of completion. It's a beautiful thing. I'm definitely going to ask Anu and Joyce about that, by the way. I love that idea. Okay, completing the application. Awesome, guys. Is there an option to meet the mentor? Oh, Anu, do you want to talk a little bit about a meet and greet? Like if they want to meet the mentor first?
Really, once you're matched with a mentor, if they happen to be in your city or if you happen to be visiting a town and they're up for that, make it happen, right? It's up to you and your mentor to decide the right level of engagement. And many times your mentor may not be in the same city as you, they might not be driving distance, but if you happen to be in the same space, yes, meet up. But they have to be, obviously, they have to give consent to that. And it's up to you and your mentor to make that arrangement.
Yes. Exactly. Do we have referrals for tax pros, accountants, and CPAs? Yeah, once you're in the program, we absolutely do provide referrals because many times we prefer you to connect with your mentor and see if there's engagement there. If not, we absolutely understand that you may want to go outside of your mentor. So we do provide referrals outside of your mentorship as well. So yes, to answer that question. Somebody asked, are tax professional mentors? I saw that somewhere. Oh yeah. Are there any tax professionals as mentors? Yes, there are some. Again, I'm not going to go there, but just so we know, like there's accounting professionals, there's bookkeeping professionals, there's tax professionals. Many are not all the same thing. I'm kind of like a rare one. Would I do all of it? But there are most of the time people do one or the other. So there could be, but all of our professionals are bookkeeping professionals first. But do some of our bookkeepers possibly do taxes? Maybe. But we're not focusing on the tax prep. We're focusing on the program readiness and the bookkeeping. So just to be clear on that. Can you share, this will probably be the last one. Can you share some words of encouragement? The logistics of being a small business owner is very overwhelming from all of the various departments. Yes, LB, words of encouragement. Well, let me just tell you, you showed up here. And so the fact that you showed up and that you're even brave enough to put that openly in a chat shows that you are asking for the help. You're looking for the help. And I'm just going to speak for myself. I'll let the ladies kind of end on their own note. That's how things come back to you. So just the fact that you're showing up, you're believing in abundance, you're asking for these words of encouragement, they're going to just fall on you. Like this is all going to happen to you now. It's the fact that you just learned about this opportunity is amazing. And you're not alone. We all feel like that. Okay. We all feel the overwhelm. But as soon as we find a place of belonging, as soon as we find that we're not doing this alone, a lot of that stress is released and we're able to move forward with all of those tasks you mentioned. So I just thank you for showing up because I truly believe that showing up is half of the work and you already did it. So congratulations for that.
What she said. All right.
Absolutely.
It is time.
Thank you. Yeah. Thank you to everyone for attending. Thank you for setting this up, Artui. Really, really appreciate it.
Oh,
and we look forward to continuing our conversations with all of you.
Yeah. Thank you so much, everyone. This is a great resource. I am pretty sure from the reaction of the audience, I can see the excitement, I can see the interest. So, and I'm pretty sure this is a great resource for the small businesses. So I encourage you to go. If you didn't yet apply, go ahead and apply for the program. And I'm pretty sure you will, benefit a lot from the program. And as Mariette mentioned, like, you know, the financial side of business is the foundation. And as a business owner, you should really master on it. You know, you can bring in a technical person to do the technical work, to do the like other jobs, but you know, as a business owner, you have to master the financial of your business, not the details, but overall, you should know what's going on, what's happening in your business, what is the next like strategic move for you. So this all depends on your financials. So I would say take advantage of this program. And you know, I'm pretty sure like all the mentors, Margaret, like everyone commented on your energy. You're awesome. You know, the energy you bring into the room, it's awesome. And I'm pretty sure other like mentors, you know, they are like great mentors there. So I'm very, you know, excited, excited to have this program and collaborating with you guys. And I'm pretty sure our business owners, small business owner, they are going to benefit. So I don't see any other question, and we are like at 2. We were thinking it's too much, but you know, it took that much time. Thank you so much, everyone. I just want to say have a great rest of the day, and we will talk, you know, we will be in touch. Thank you, everyone who joined today. Have a great rest of the day.
Thank you, everyone.
Bye-bye.